welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is your favorite show, Daily Call, the show that addresses all your stock-related queries. In case you're watching this show for the first time, well, this is where you can actually go on and ask all your queries. The WhatsApp number is flashing on your screen, so send me your questions along with your name, your location, and your contact details as well, so that we can take up all your questions with our top market experts, and you can get a custom-made advice as well. Alternatively, you can also use the YouTube platform where you're watching our show live on, and send us your questions in the comment section there so that we can engage with you live on the show, and we can also take up your questions live with our top market experts as well. Well, it's panning out to be a good day of trade as far as the markets are concerned. Flattish on the Nifty, 23,597 can be seen. Let's look at the other sectoral indices and what's really happening beyond the surface on the markets. It was the Nifty Bank that's been holding on, and right now it's flattish in trade. The Nifty next 50 names are doing better. Mid caps and small caps are doing far better than the benchmark indices. Mid caps are up 0.6%, small caps about 0.7% higher, although that bit below its opening highs that we had seen for the markets. Sectorally, the action you can actually see across the board on various sectors today. For instance, financial services are doing well. FMCG is 1% higher. PSU Bank slightly higher in trade. 0.5% gains on the consumer durables. Oil and gas about 1.5% up. You also have the healthcare index about 0.25% higher in trade. Some of the sectors are still feeling the heat from yesterday onwards. Auto space is under pressure. IT, metals, pharma. That's a bit got into a drag as well. So it's kind of a mixed day of trade, but let's see how the trade really pans out. This is the first trading session for the April series, and the last trading day for the week, the month, and the fiscal year 2025 as well. Let's welcome our guest on board to help you understand, how do you read the market sentiments currently. Mr. Kranti Batini, the Director of Research at Wealthman Securities, is joining in. Kranti, a warm welcome. Good to have you with us as always. As I was just mentioning, it's the last trading session of the week, of the month, and of course of the quarter and the fiscal year as well. So very, very important day of trade. This is the time when we are looking back, revisiting what has gone on in this year so far and what will be coming forward in the new financial year. Tell us, there's been no dearth of news flows, no dearth of events, and the market moves, a roller coaster ride that we have seen so far. What goes next in the markets?
Yes, actually, we are at the final day for the financial year. 31st March, ending with 2025. Today is the final trading day for the year, notably. So this year has been I can say definitely, as you mentioned rightly, it's a roller coaster year. And majority of the investors, what we witnessed is it again reconfirms the strength of Indian market, despite of different worries. It can be the geographical worries, the global tariff wars, and many things that happened during this year. But Indian market, at the end of the year, it has shown its strength and resilience. It reconfirmed the strength for the investors. Just a fortnight back, everybody were talking about complete negativity. The sentiment was very negative in the market, but in the past 7-8 trading session, what would be the negative talk in the market, it got subsidized, and markets have climbed all the wall of worries at this point of time. So one need to habituate going ahead to face these kind of the challenging situations. That's extremely crucial. But at the same point of time, the investment journey, the long-term investment journey, one need to keep intact. There will be worries. Definitely, there will not be a day we'll sit back and relax and say in markets everything is fine. This is the day we can go all out. Those days are very, very limited in the market. But one need to habituate those days, and that's where the opportunities, the market throws the opportunities. When the challenging days arises, investors need to identify those challenges and how to turn those challenges into opportunities. That's what extremely crucial when you want to create wealth in equity markets. So we are back again. Market is around the 23,500. Most probably market is going to spend some time in this range. We are going to see the consolidation in the market in the next couple of weeks time. And also we have these tariff again, the tariff news has been resurfacing again. The first week is going to be. So the markets are going to dominated by the policy making decisions from Europe. But most major important thing going ahead is the Q4 quarter earnings. Always repeat and I always believe that stock prices are slaves to the earnings. If we
Yeah.
regain the earnings, if we show the strength of earnings, nothing in the world is going to hurt us. That's what I believe. So we can see some kind of a strength that's going to come in the Q4 traditionally as a quarter, as a earning season is concerned. So I believe the Q4 is going to be better than Q3 or better than a Q4 of the previous year. That's what going to sustain this market at these levels. If we get any kind of negative surprises, that's where the real disturbance is going to be. Or by and large, markets are going to be consolidated in this range to get the better clarity. How much the impact of the earnings, that's actual impact of the earnings of these all the hue and cry and market thoughts about the tariff is going to factor into the earnings. Till the time markets are going to be in a consolidation phase and markets are going to trade with a positive bias.
Okay, got that. Well, Mr. Batini, we have a lot of questions coming in for you from our viewers. Then we'll start taking some of those questions and keep coming back to your views on the markets. Anuj Singh is the first, viewer of ours who's written on our YouTube platform. He says, "Good afternoon. I want to know about Blue Jet Healthcare. 505 के रेट पर 505 के रेट पर 100 शेयर्स खरीदे हैं इन्होंने. 78% तक का प्रॉफिट हो रहा है. अभी इनको होल्ड करके चलना चाहिए या बुक कर लें, ये पूछना चाह रहे हैं. सबसे पहले अनुज जी, बहुत बहुत बधाई आपको. मेनी कंग्रेचुलेशंस. In this kind of a tough period of time, you're sitting on companies which have actually delivered 78% kind of profitability for you. So there you go. You have selected the right stock at the right price and are holding on with patience. Many congratulations to you for holding on to this one. Mr. Batini, what exactly would your thought be? 888 now for Blue Jet Healthcare. Do you think this is a stock that can continue to do wonders?
Yes, actually, the stock has demonstrated its strength. I advocate the investor to hold on to the stock. If the investor is, since he is making a multi-bagger kind of return, the December quarter have been a fabulous quarter for this company. Just wait on to the next coming quarterly earnings. But as a matter of safety, what he needs to do is make a free of cost of his holdings. Okay, he can make his. Okay, so that would help him to be on a safer side. So I advocate him on the rallies. Most at the peak of the stock price around 900, he can make free of cost of his position.
Okay, I hope this has helped you out, Anuj, in recognizing what exactly should you be doing here. Let's take the next question. We have, okay, Ankur Modi writing in, says, "Hi Sakshi, hope you're doing well." I'm very well, Ankur. Thank you for asking, and I hope the same for you. He says, "Can I please get views on two stocks, KFin Technology and CG Consumer? I want to invest in both these stocks at the current levels for long term." Okay, we'll definitely get you your view. Mr. Patini, KFin Tech first from the capital market story. This has been an erstwhile wealth creator. Do you think it can bounce back and continue to deliver promising returns that we have actually seen in the past?
Yeah, definitely, Sakshi, he can hold on to KFin, given the kind of potential upside for this company. He can hold on to KFin. The other stock also he can hold on with a
CG
perspective of
Consumer.
long term.
CG Consumer. So can he invest in the current
Yeah,
levels also,
definitely.
Mr.
The CG
Patini?
consumer also. Yeah.
Okay, okay. Okay, got that. Ankur, I hope you've got.
There is no need to.
Yeah.
there is no need to buy in a hurry, Sakshi. He can
Okay.
add these stocks on dips.
Yeah. Okay. So, Ankur, the strategy that has been advised for you is, add these stocks on dips and do not go overboard and don't be in a hurry to invest into these stocks at this point in time. Next, we have a question from Satya CK. He says, I want to know on the shipping related stocks, GE Shipping and Shipping Corporation of India. Can I enter afresh into these stocks? Well, a good question there, Mr. Batini. Shipping stocks are coming back in flavor. Defense theme is coming back in flavor after those 4 5 months of pain. Do you think between these GE Shipping and Shipping Corporation, is there a better bet to go for?
Sakshi, in terms of the shipping space is concerned, I'm not completely sanguine about this sector. I'm just in a wait and watch mode at this point of time. The stocks are by and large fully priced in. So I'll see the next couple of quarters earnings to make any fresh position in these companies.
Point. I hope this has also helped you out. Let's take the next one. This one is from Mr. Vineet Kulkarni, and he wants to know, Mr. Batini, from your end, any key stock on the futuristic themes, automation, robotic, affordable AI, all of those things. By looking at these spaces in a big way. But is there a stock he's asking for the next 10, 20 years? Can he still look at a stock that could be big on futuristic technologies going forward?
Very interesting. The dynamics and the surface, the global disruption has been changing very fast. Okay, one need to be nimble. Okay, in terms of taking the decisions, in terms of identifying these greater themes. Yes, of course, definitely there would be a greater opportunities in next few years. Robotics is going to be a bigger theme going ahead. But at this point of time, very small. Listed play entities are playing in this space in India. So in terms of the next bigger themes, the chip making can be a greater theme. In this chip making, the CZ Power and Keynes Technologies, these are the companies are making some kind of a great effort and progress. So he can keep these stocks on his radar as a safer bet and just try to follow the management commentary and what's happening and what kind of work these companies are doing in this semiconductor space. The space looks very interesting going ahead. This is one of the key themes to track in the medium to short term.
Okay, fair point. I hope this has also helped you out in understanding the right strategy on the new futuristic technologies. We have this question now from one of our other viewers, that is Samvit Nageshwar, and he wants to know, why is there a sudden rise in BSE stock today? As of now, the stock is 17% higher in a single day. Samvit, there has been this news flow. Last night, SEBI released their consultation paper saying that the exchanges can only keep their expiry sessions or for their FNO contracts either on a Tuesday or on a Thursday. And this has led the competition company, the NSE, the National Stock Exchange, hold on its, or put on hold its plans to shift its existing expiry to Monday, which it had initially planned, starting April 4th. And this recent consultation paper that has come in from SEBI will now have to be followed by both BSE and NSE and decide for themselves Tuesday or Thursday, either of the 2 days that they can keep their expiry sessions on. Remember, when this news flow had come in, BSE had also seen a sharp crash following NSE's announcement that they are going to be shifting the expiry session to Monday. But today, when the reversal is happening, you're seeing the same sentiments come back in full flavor. 5,474 today, Mr. Batini, for BSE. Do you think will it be wise to look at BSE at these levels or let the news enthusiasm settle down?
Sakshi, you answered the question better than me. Okay, you elaborated in a best way. So I'll just reiterate your point. This is what we are witnessing is complete reversal of the news flows that hampered the BSE stocks earlier. The stock is bouncing back at this point of time. For any kind of fresh investments are concerned, since BSE is the only listed stock exchange in India, given the kind of emphasis and also increase of the trading volumes in the cash segment as well as the derivative segment of BSE also growing significantly. It is a fully priced in stock at this point of time. Any declines one can look into for any kind of serious investments. Hold on to the stock, but any fresh investments, just wait and see how these news going to translate into earnings. That's where one can build the fresh positions.
Okay, got that. Let's take the next question then. This one is, we'll take some questions from our WhatsApp also for our viewers who are writing in. The first one is from Maruti from Mumbai. He says, could you please advise me on my stock Rain Industries? I have 500 shares of Rain Industries at the rate of 136 rupees per share. Please advise me on best exit. I don't have any issue in holding this stock for 3 months more, but I do not know whether the stock performance will continue to be good. Okay, and he also says a note that the stock purchased by me was via IPO at just 10 rupees each. Okay, now there is a little confusion. Okay, he wanted to say that the current market price of Rain Industries is 136 and his purchase level is 10 rupees at the IPO. First up, congratulations, Maruti, for holding on to this stock. You've actually seen exponential gains, by investing in this IPO and of course getting all those gains all across. The stock is now hovering at 136, 137 onwards, and now you have a short-term view. You've been holding on, but now for the next 3 months, you want to know what is the best course. Mr. Batini, what would you advise on Rain Industries? Should one be holding on? Can the upward performance continue? Or is it better to probably, since the horizon is very small, should one on a staggered way keep exiting because the ultimate aim is to exit and take all the profits?
Yeah, Sakshi, the stock couple of years back, it was a strong performer when the calcining coke demand was on a higher note in the market. Okay, in fact, the stock touched the all-time high of 450. From there onwards, last 2 years, the earning pressure was there on their margins, and the stock consecutively posting losses in the last couple of quarters. So at this point of time, given the the demand for calcium coke is concerned, it is slightly going up. You can hold on at this point of time, but what that's the key things actually. When to know, one need to know when to sow the seed and when to pluck the fruit from the tree. Last 2 years, the stock have not done anything great. Okay, it is just one of the underperforming stock on the indices, and also the mounting debt also for this company is one of the key worry. At given the kind of current valuations are concerned, he can hold on to the stock on a medium to longer term perspective. But anything for short term, I'll definitely avoid this stock.
Short term, you'll avoid this stock. So I think better to exit with your current portfolio at this point in time in case you have a very short term horizon and you've actually made a lot of profits as well. So better to book that profit and, enjoy the money that you have actually made on your stocks and investments right there. Let's look at some of the other stocks that are coming in. Again, on our YouTube, we have some questions. We have Mohit Yadav wanting to know, sir, could you please advise on Swaraj Engines for 3 years perspective? Is this a good stock to look at?
In terms of the fundamentals are concerned, if the investor is a long-term investor, definitely one can hold on to Swaraj Indians. Recently, the stock has rallied from 2,600 to currently at 4,000 levels. So on a medium to longer term perspective, the business is thriving. So you can hold on to Swaraj Indians at this point of time. Just keep tracking the next quarterly earnings. That is crucial. Again, we are witnessing demand for the rural tractor business is concerned. Credit offtake is going to be good this year. If the monsoon is good in the coming months, definitely Swaraj is going to rise from this level also.
Okay, got that. Let's take the next question. This one is from Satya. He says, I'm holding Tata Motors and Tata Technologies both. I have not profit on either of these from the last 2 years, and now the stocks have not been doing well. I don't know what should I do. My buying price for Tata Motors was 830 and Tata Tech was 850. That's right, you've actually held on to both these stocks on their way down and on their consolidative journey, at least in the last 1 year or so. The stocks have not given that much returns. But before those, at least Tata Motors was in an uptrend, so probably you invested at slightly higher, but not too much higher also for Tata Motors, 830 odd levels. Let's see whether there is any way out for you here. Mr. Batini, Tata Group stocks, Tata Motors and Tata Technologies, what would you have to say?
Sakshi, you need to look at the long-term perspectives of these
Yeah.
companies. Okay, Tata Motors. If you see the last 4 years, 3 years charts, the stock has risen from 300 to it went to the range of 1100. And again, what we are witnessing is some kind of consolidation in the stock. Given the kind of longer-term picture for these Tata Motors is concerned, one can hold on because Tata Motors earlier have the advantage of front runner into the EV space is concerned, but this theme is slowing down at this point of time. And also the recent Trump tariffs on imports into US, that's also creating some kind of a pressure in the medium to short term. And also the good thing for Tata Motors is China is getting revived, where the JLR numbers are extremely crucial, but they do have the competition in the overseas market from BYD kind of names and also Xiaomi. These are all creating some pressure for Tata Motors. But given the kind of stocks resilience history is concerned, I will hold on. With respect to Tata Technologies is concerned, it is much hyped and much discussed um, uh, IPO. From the time the stock is in a consolidation phase, given the kind of the business model, the strong business model the company have, I would be hold on to Tata Technologies despite of its underperformance at this price range is concerned.
Okay, fair point. Let's take the next question. This is from our WhatsApp that we are getting. Rupesh Agarwal, he wants to know on Shakti Pumps. 300 shares is what he has at the rate of 1058. He has a short term view on Shakti Pumps. Should he hold on?
Sakshi, for short term is concerned, definitely he need to have the trailing stop loss around 800 level. That is the range. He can hold on to the stock. It's the stock is showing its strength. Okay, last fortnight has been some kind of profit booking we witnessed. The stock is one of the strong performer. So given the kind of the outlook for this space and also the momentum that's built up into this company is concerned, one can hold on to the stock, but strict trading stop loss is advisable for this stock.
Got that. We have Mr. Dasaradhi writing in. He says, Kranti sir, I'm a big follower of yours. On Telugu platforms, I have been following you too. I want to know from you. I have 500 shares of IOL Chemicals at the rate of 68. I want to know, can I hold or exit? Because I'm a long-term investor. I will go by your advice. Okay, Mr. Dasaradhi. Mr. Batini is a big follower of yours. IOL Chemicals, what would you guide?
With respect to IOL is concerned, all these chemical stocks are in a consolidation phase, actually. So it's going to test his patience in the medium to short term. But given the kind of strong resilience the stock is showing in terms of its earnings and also the price action is concerned, I suggest the investor just to hold on to the stock for a couple of quarters. The stock can give decent returns from these levels also. So for a medium to longer term perspective, you can hold on to the stock.
Okay, fair point. Let's look at some other questions then. We have this question on one of our viewers wanting to know. This one is from Vineet Kulkarni. He wants to know on any paint sector stock like Asian Paints, or which other stock should I select? I have a long term view, 10 to 20 years. Which stock would you recommend from the paint space?
Sakshi, personally, this space is a interesting space to look at. there is a lot of competition is getting building up in this space. The market leader is Asian Paints, but these are all fully priced in stocks. So I'm not in a hurry to buy these stocks. These are all great business models, but the kind of competition is that's getting built up in this space. One need to wait and watch because telecom was a great space to watch in the last 10, 15 years. But when the competition intensifies, nobody makes the money in terms of the investing patterns are concerned. So I'm not in a hurry to get into the paint space. I'm going to avoid this space in the medium to short term. Just see how the new entrants are gaining the momentum. I'll be in this space. I am cautiously optimistic in this space. It's a great space to be in, but who will make the money is extremely crucial.
Okay. Mr. Batini, we'll take one or two last questions. Archana from Bangalore writes in, says, good afternoon, Sakshi. Good afternoon to you, Archana. Hope you're doing well. She wants a suggestion on Gensol Engineering and wants to know she's facing 80% losses. What should she be doing? Okay, let's actually pull up Gensol Engineering and then see what the current price is really looking at this point in time. 184 again on a 5% lower circuit. Last 1 month, the stock has fallen about 65 odd percent. Past 6 months, there's a 78% offer price erosion that we have already seen. Looks like she has been holding at the beginning of the month and at the beginning of the new year, 2025, and 3 months flat, the stock has given up 76% of its value. Is there a way out? Should one bite the bullet, step out of this in case the stock has only been, a big wealth destroyer and shift out positions, Mr. Batini? Or do you think a reversal could be seen? What's your view?
Sakshi, that's what these stocks are new age business models, and also the new business models these stocks are, and fully priced in stock. Any kind of disruption in the business model or kind of news downgrades by the rating agencies, and also the news flows, negative news flows keep on hampering the stock price. And within a month, the stock almost are lost around 70 to 80%, which is a biggest damage for the investors' wealth. But how the things are going to pan out? They have a debt repayments that are coming up, and one of the key subsidiary, the entire news flow about their Blue Smart business is concerned. They have sold to the Reflex. That's what the news indicates and the disclosure indicates. If they could able to meet that debt obligations on a timely manner, we can see some kind of revival in this stock. Otherwise, one need to avoid in the medium to short term this stock. Just keenly observe the news flows. Otherwise, avoid this stock. These business models are suitable for the high risk appetite investors. Otherwise, the risk tolerance levels are low. One need to avoid these kind of stocks.
One needs to avoid these kind of stocks. Well, thank you so much, Mr. Batini, for guiding all our viewers through all these queries that they have asked. And we wish you a fantastic weekend and see you in the next financial year. Hoping to get more stock ideas, investment thoughts, and wisdom on the markets for all our viewers in the new fiscal year too.
Yes, actually, looking forward to seeing you in the new financial year with many more new stock ideas. Thank you for hosting me.
Thank you so much. Always a pleasure to have you. Let's now get into the second segment of our show now, viewers. We have another top guest joining in now. Mr. G. Chokkalingam, the founder and MD of Economics Research, now joins in. Warm welcome, Mr. Chokkalingam. How are you? And tell us how is the market setup really looking like? We've had 5-6 days of consecutive recovery. We are seeing 600 back on the screens, and I want to know FII is returning, with favor as far as Indian markets are concerned. Do you think things are now seeming to be in a better shape, and FY26 could start off with a bang?
Yes, on this channel as well, I have been consistently saying that market should bottom out by March end. I was lucky
Yes.
enough to see, my strong conviction becoming true. Of
Sure.
course, this was based on the certain fundamental and logical factors. And the
Yes.
same factors make me to believe that worst is behind us. Yes, there could be profit booking here and there, minor correction can happen. But the kind of crisis we saw, is not likely to happen again unless monsoon fails miserably. Why I call that as a crisis, because the overall market cap about a few weeks back fell as high as 100 lakh crore, and that was about one third of India's nominal GDP for the current fiscal. So right now, we have recovered a lot. In fact, we have recovered about 30 lakh crore after falling 100 lakh crore. So still we are 70 lakh crore down, but I am not visualizing any scenario where again this can become 100 lakh crore. The reasons: one, the FIs have come back. The rupee looks like it's quite stable now, and also the H2 numbers, whether it is a GDP or corporate earning, they are likely to be better. And investors inflow, the new investors inflow, despite the market falling or crashing, the last 4 months they have been coming to the market at the rate of 4.5 to 8 lakh investors every week. That is also positive. And the trade war also to a large extent discounted. Yes, the trade war would continue for one more year, but it will not be in aggressive tone because US market has given up all the gains, and definitely there are signs of deflationary condition because of the trade war in terms of job cuts, etc. Small businesses are going through a difficult time. So it's a catch-22 situation. They cannot give up the trade war because the trade deficit is more than $900 billion per annum. So at this rate, it can touch easily 1 trillion, and then in 5 to 8 years, the US economy can be into major crisis. So it will continue, but it cannot be so aggressive that will impact the US economy, and it cannot be so aggressive against India as well, because politically, US cannot go on doing very aggressive measures against both India and China, which are the world's largest countries in terms of population, and also in terms of economic parameter. India is passing a trade deficit to the tune of $48 billion in CY24, whereas China accounted for $361 billion of trade deficit to US. So we are not such a major cost for the pain of US. So considering all this, and also year end when markets are down, a lot of people do restructuring of their equity assets, rebalancing and selling the loss-making shares and rebalance the asset. So all those pressures would end most probably today. So therefore, I am seeing a situation where we will see a significant recovery from April first week. So next 6 months, I see quite a robust outlook for stock market, and that should be led by small and mid-cap stocks.
Okay, wonderful. Thank you so much for giving us that broad outlook on FY26. We hope to keep that in mind while we invest. Let's look at some questions now, sir. Mr. Chokkalingam, we have a lot of queries coming in for you. Komal first from Bangalore. She wants to know on two stocks. One is Vodafone Idea. She wants to invest at the current level, 6.9 odd levels, and she wants to buy 1,000 shares. Also, ITC at the current levels as well. Should we be looking at it? Her holding period would be 3 months perspective. So for a short-term period is what she's looking at. Vodafone, considering the kind of decline that we've seen in the recent past with the negative news flows impacting the stock, do you think would it be wise to look at the stock at this point in time, or will it be just like a trap? And the other one will be ITC, sir, at the helm of the new fiscal year starting. Do you think ITC could be looking at a good enough new year?
Yeah. So first of all, Vodafone, it would be very difficult for any analyst to give a strong buy call based on the fundamentals at current prices. No way the fundamentals can justify, because its market cap is around 49,000 crore, whereas its liabilities are around 2,43,000 crore, and enterprise value of 284 lakh crore, and EV to EBITDA is around more than 15 times. So now the biggest problem is that its equity base is over 71,000 crore, and which is more than the annual revenue of 45,000 crore. and then companies making losses also. So it's very difficult to reward the investors with this kind of equity base when the company's revenues are much lower than the equity base, and it's also making losses. It's very difficult. And so tactically, the risk-taking investors can consider. Fundamental conviction is not there. Tactically, why I am saying is that yes, this is there are only three players. It would not be good for the country to allow Vodafone to exit the business. It's not good for the society, not good for the economy. And the business is still a very attractive business, making a EBITDA margin of more than 40%. So, under what condition, in my understanding, this stock can create a significant return, or in two possible ways, if at all they happen. I'm not forecasting, if at all they happen.
Yeah.
One, the stakeholders should write off the equity substantially, or the lenders should, convert the debt into equity at a very significant premium. Third possibility, theoretical. I am not forecasting. The government should write off a lot of obligations the company has to fulfill in terms of the arrears. Because this liability, when I mentioned, that includes a deferred payment obligation to the government also. So
Correct.
if any of these three events happen, then definitely tactically it can give return. So it is. So I would not recommend, but the investors need to take their own decision whether they should go by fundamental conviction or a tactical possible opportunity. Coming to ITC, yes, we have a buy recommendation. I continue to recommend a buy. It may not create a big wealth because even now the paper division is industry is into little difficulty. The IT service business also not growing strongly, the subsidiary of ITC, and so therefore it may not create a big wealth, but it is one of the most attractive defensive stocks in the large cap space, in my view. So therefore, we continue to recommend with a target price of around 500.
Okay, fair point. Let's take the next one. This one is from Siva Prasad from Nellore City. He wants to know on defense stocks for a short-term view between two stocks, Shipping Corporation of India or Idea Forge. Do you like any for a short term?
Idea Forge, I looked at the fundamental parameters, performance. I am not convinced about Idea Forge.
Okay.
Shipping Corporation of India is a good stock, no doubt. But we have a buy recommendation on GE Shipping. I find GE Shipping more attractive, a lot of cash on the books, and around 780 it is trading, and excellent management. And also lots of money is made by GE Shipping in terms of sale of ships. So in fact, the sale of ships has become a regular income generation, profit generation business for GE Shipping over the decades. So therefore, I prefer GE Shipping.
Okay, you prefer e-shipping, right? We'll keep an eye out on that too. Next, we have this question from Kalpesh Patel. He wants your view on IndusInd Banks. We've actually seen a recent, very, very volatile set of events that have led to a sharp roller coaster rise on IndusInd Bank. Things are recovering slowly and gradually. Do you still feel and have the confidence on IndusInd?
Really, no. I used to, but I really don't have that kind of confidence because one needs to wait for all these inquiries and findings. What led to this discrepancy, and all these regulatory inspection or should happen and end. Then only I would take a call. Yes, if you look at the fundamental per se, it is attractive. Such a great bank which has done in the past in terms of the business and shareholder return. Now it is available discount to book value. But my fear is that this is what happened to banks like Yes Bank and a couple of more banks when there were certain issues, discrepancies, the governance issue, doubts on governance issues. So valuation multiple crashed and they stayed around one time or below one time for very long. So my apprehension is that in the absence of complete understanding of what caused the discrepancy, was there any governance issue, unless we have a comfort on that, I won't take any call on IndusInd Bank, even though it is at a discount to book value. So my fundamental research view is to wait, before buying, wait for all these investigations and inferences to be over.
Okay, got that. We have this question coming in from one of our viewers. Ankur Modi writes in that the beauty of the show is that we don't just get our queries solved, but some of the other stocks asked by other viewers also guide us better. Thank you, Ankur, for writing in. Yes, we try to answer as many queries as we can so that you can get a perspective from our guests on various sectors and various kind of stocks, so that in case they are on your watch list, you have a better idea of how to approach them. His question is on Excite batteries. Should that stock be looked at the current level, sir?
Yeah, I studied this stock. My research view is buy for medium to long term. Excite Industries.
Okay, got that. Let's take the next one. This one is from Tekpal Bhatia. He wants to know on Dream Folks. Do you have an understanding on this stock, sir? Not too long ago, it got listed with a unique business model of airport lounges access that it gives. But the stock has not really lived up to the price performance or the earnings as well. 2.4% down even today, 219. The stock has actually been a very, very lackluster stock to look at.
Yeah. So I have not studied, but if I look at the fundamental, even now it is a little stretched. So one can wait below 200 to consider. That's my research view.
Okay. One more question that's coming in. I don't know if you will be tracking that stock, sir. This is from Jay Rami Reddy. He says, I'm holding 200 shares of John Cockerill. And this I bought at 4,500 levels. I want to know, since the stock has fallen down, should I be adding more stocks at the current levels as well? So, at this point in time, I think under 3,000 rupees as well, the stock is really trading at. It seems to be a very illiquid counter with low volumes. Any suggestion here, sir? Have you at all tracked this stock?
I am seeing the standalone, which is very pathetic, but then one has to look at the consolidated performance before taking a view. But I am not able to, get access to the consolidated performance. So therefore, I am not able to give any view on the stock.
Okay, we'll take one or two last questions then, sir. Anjali from Pune says, I'm 28 years old and I want to start investing in stock markets. Could you please suggest to me any long-term stock ideas? Well, Anjali, good to have you on board and great to know that you're starting off your journey in stock markets. I hope you already some experience with mutual funds and certain first stepping stones already, and now you are actually wanting to take professional help by looking at some stocks for the long term. The good part is you're looking at long term and you're taking a suggestion from professional experts like Mr. Chokkalingam. Mr. Chokkalingam, somebody who's starting young, exploring for long term in the stock markets, what is the ideal way to go about selecting stocks?
Yeah, very interesting question, and it would be applicable for all your viewers. Young people, when they want to start, it is a good to start because India's market cap was around 2 lakh crore in 93. And many people would be shocked. In 2000 also, the overall market cap was 8 lakh crore. That 8 lakh, less than 8 lakh crore. That 8 lakh crore became 484 lakh crore last year in September. So no match for wealth creation. But two things I would like to say that yes, you should be investing, but the problem is, if you listen to people like us who come, once in a while without, advance notification to you, when we change the view, you won't have access to it. Like look at IndusInd Bank. After I appeared on TV channel, evening the fortune changed overnight dramatically. So therefore, I would suggest youngsters to put, if it is a big money, put it in the mutual fund. Yes, you start with investing in equity in a smaller way. Listen to us, invest, but definitely what I would suggest is that you also try to learn little bit of equity investing. You don't have to become expert, but a little bit of the basic fundamentals, and then track people like us and evaluate our performance, your understanding, and that journey if you start, the wealth creation will be much faster because mutual funds invest in 60 to 100 stocks. But in my learning, a lot of people made investing in 8 to 18 stocks and doing a lot of research and monitoring, and that is a secret of very big wealth creation for many people. So therefore, I would suggest with a big money, go to mutual fund, but start investing with a small money in equity and listen to us, but follow it up with your own understanding of those shares you invest. And I would suggest something like a CDSL
Okay.
is long-term pick, and this is related to stock market. As I mentioned earlier, Every week, even 5 to 6 lakh new investors are coming, so which is positive for CDSL. And the stock market business is going to be a perennially growth business, and therefore depository business also will be perennially growth business. So I would recommend for very long term CDSL.
Okay, got that. Well, thank you so much, Mr. Chokkalingam, for being with us on this special edition, guiding all our viewers through. And hope you have a great weekend and a wonderful new financial year. We'll see you very soon in the new fiscal year to take more guidance from you on markets and the way forward. Thank you. Appreciate your presence.
Wish you all the best. Thank you.
Thank you. With that, viewers, we wrap up today's edition of Daily Calls, helping you understand how to go about your stock portfolio in case there were some other questions that we could not answer. Well, we'll be back now on Tuesday because markets are off on Monday, and we'll be coming back with 2 more experts guiding you through. So take this weekend off, look at your portfolio, see where exactly you really need your doubts clarified. Write down all your questions and keep sending them to us. The WhatsApp number is flashing on your screens. So note this down. Keep sending your questions and we'll take up most of your questions now on Tuesday. Thank you so much for being with us on this special edition on Daily Calls, and do stay tuned. Market coverage will continue on the other side.
Get ready for the grand finale. After electrifying events in Delhi NCR, Mumbai, Chandigarh, Kolkata, Hyderabad and Bengaluru, corporate leaders reunite for the Silver Jubilee season's last swing. Tee off with honchos and